welcome to the Mortgage Rates Weekly Market Update for the week of June 25th, 2018. Hello, I'm John Thomas with Prime Residential Mortgage. Here to give you your update. Well, last week, mortgage bonds were able to finally stabilize with stabilized mortgage interest rates. If you take a look at the bond chart on the screen, you can see mortgage bonds have been on a roller coaster ride since the beginning of May, end of April. So bonds were selling off, hitting a floor of support, recovering, not being able to break above ceiling resistance, selling off, hitting a floor, recovering. So at this point, we've ended the week right at the 50-day moving average, as you can see there. Mortgage bonds were able to hold above the 50-day mortgage average and end the week that day. So that is good news that we've held the 50-day moving average. There is a technical pattern that's going on called a Pennant Flag formation. When that happens, that means we're looking for a breakout in the bonds. They're either going to break out higher or break out lower. So with that 50-day moving average holding, we're hoping mortgage bonds from that technical signal can break out higher. And in that case, we're going to recommend the float to see, what we can pick up in lower interest rates. But if the 50-day moving average breaks and bonds sell off, that's going to be a breakout lower. That's bad news. We'll quickly switch to a locking stance. So to start the week, we're going to recommend carefully floating your mortgage rate to see if we can stay above the 50-day moving average, break out of that Pennant Flag formation, move mortgage bonds higher, which will move mortgage interest rates lower for your benefit. Now, if we dig into the economic news, we had the Federal Chair, Jerome Powell, speaking last week, and he stated that the U.S. economy is doing very well and that the U.S. labor market is particularly robust. He also stated that inflation has moved up to the Fed's target rate of about 2%. He finished by saying, with the economy strong and risks to the outlook balanced of the financial future, he said the Feds will continue to gradually raise their short-term Fed funds rate throughout this year into next year. Now, that's inflationary. As the Fed funds rate continues to go up, if inflation continues to go up, that would be bad news for mortgage bonds. So the long-term outlook for mortgage bonds is that based on this information, we should see mortgage interest rates gradually rise over the year, but it never goes straight up. So in the short term, with the technical tradings, we're hoping that mortgage rates can actually dip down. Maybe you can catch a slightly lower interest rate. But long term, you want to get out there, buy, get under contract, refinance, whatever you're trying to do, because the long-term outlook for interest rates is for them to move up based on the Fed's outlook for the economy and inflation. All right. Then we had weekly initial jobless claims come out on Thursday, showed 218,000 claims, which was a drop of 3,000 from the previous week, which had been revised higher to 221,000 claims. So that's the number of new unemployment claims filed for the week, and that number has been very, very low, which is a good sign. The jobs report will be coming out Friday, July 6th for June, and this was the sample week that's actually going to be used in that report. So we're looking for a very strong jobs report coming out July 6th. That could be a bond market mover, so we'll keep you updated as we get closer there. Now, in housing news, we got a bunch of reports. May 2018 existing home sales were reported down by 0.4% from April 2018 to an annualized rate of 5.43 million units. But existing home sales were down 3% from May 2017 to May 2018. So we're seeing existing home sales dropping. And the reason why they're dropping from last year is because this record low levels of inventory. Right now, average national historically low at 4.1 months supply of homes for sale. A good healthy market is 6 months of homes for sale. NAR is basically stated low inventories will continue to be the biggest impediment to new homes, existing home sales. So as the demand is present in the market, we just don't have the inventory. So we're going to continue to see a seller's market throughout the rest of 2018 into 2019. That's good news if you're a buyer, because if you can buy, once you get in, your home value is going to continue to go up. So that means it's a great investment. So the cost of waiting is going to be a big deal to you. Do not wait till next year if at all possible, because you're going to have higher rates and you're going to pay a lot more for the house because homes are going to continue to appreciate in this low inventory environment. All right, then we saw new home sales for May 2018 rose 6.7% from April 2018 to 689,000 units on an annualized basis. New home sales were above the expected 666,000 and the highest reading since November 2017. So new home sales rose 4.1% from May 2017 to May 2018, and the median home price of a new home sale is $313,000. So new home construction is kicking butt, doing very well, and again, low inventories are helping the builders because there's not enough homes for sale. So if they start building homes, they're going to sell. So that's great news there. Then we saw a report on housing starts for May 2018 surged higher to an almost 11-year high by moving up 5% from April of 2018 to 1.35 million units on an annualized basis. So housing starts, the number of homes builders have started construction on. So they jumped 20.3% from May of last year to May of 2018. Future home construction could potentially slow as building permits for May dropped 4.6%. So new home construction is doing amazingly well. We could see a slight slowdown because we saw a drop in building permits in May. But overall, I don't think that's going to have a big impact. New home construction is going to continue to do very well because we have this very low inventory, which is great for home builders. Now, we did mention that there is a USDA loan update. USDA did change their eligible areas in certain areas. There was one area in Delaware, a bunch of areas in Maryland. So in Delaware, Middletown, Delaware is no longer eligible for USDA financing as effective June 4th, 2018. And on June 13th, they increased their maximum household income limits. So you can get all that information on our blog at DelawareMortgageLoans.net. Now, if we dig into the local news, we have a free homebuyer seminar tomorrow night, Wednesday, June 27th from 6 to 8 p.m. in Wilmington, Delaware at the Independent Small eXp Realty Office, Suite 88. And then we're back in Newark on Saturday, July 28th from 10 a.m. to noon at the Christiana Hilton Hotel. You can register for either one of those events, but give us a call, 302-703-0727, or online, www.DelawareHomebuyerSeminar.com. Look forward to seeing you guys next week.